Hello, I'm Cynthia Ng. This is AWANI Review. A new year brings a fresh set of questions for markets. What will drive returns for 2026? Where are the opportunities and risks? And does the technology and AI rally still have room to run? So these are some of the big questions for 2026. And joining us to break it down is Kenny Yee. He is the head of research at Rakuten Trade. Happy New Year, Kenny, and thank you so much for
New Year, Cynthia.
coming
nice
to the studio.
To see you. Yeah.
All right, so let's just start with the mood early in 2026. We are about over 2 weeks into the new year.
Right.
Markets are still trying to figure out what kind of year it's going to turn out to be. In your position, how is the mood out there?
I think the mood is rather steady. If you ex Trump's, farcical policies, but by having him, it's quite entertaining, with his policies and his daily narratives, to decide which direction he is going. He started the year with Venezuela, and now Greenland. What's next? But on this part of the world, I think we are undergoing business as usual. I think we are still seeing a lot of foreign funds coming in. I mean, you can see that most of the big market like Hong Kong, China, they're doing pretty well. I think for South Asia, some of us are doing pretty well at the moment. Like for the domestic market, I think the FBM KLCI has performed quite decent so far. I think a lot of interest has been centered on the blue chips so far. Hopefully, this will cascade down to the smaller and mid cap. Then we may have hopefully a bull run of sorts going forward. Yeah.
So on that note, I want to bring this closer to home. Talking about the FBM KLCI, I mean growth stood at about 1.4%. It's muted. It's quite muted. Big caps.
Growth.
FBM KLCI.
Yeah. Correct.
Large caps were quite solid, but like you pointed out, the small caps, the indices did fall behind last year. So looking at I would say a bit of an uneven performance, right? So what do you think really held back? Let's just go back to 2025. What held back Malaysia?
I think last year's performance you can split into two. I think the first half was terrible for the FBM KLCI. As soon as we enter 2025, you can see the index has been, on a downtrend until possibly way past June. Until we see some sporadic buying in August to steady the index a bit. And then, after which we saw, a lot of funds, especially from the domestic institutions, supporting and propping up the index, But having said that, right, the foreign funds are still selling. There's still net outflow. I think last year, total net outflow was in excess of 20 over billion ringgit, highest ever. 2023 net outflow, 2024 net outflow, and last year, more than 20 billion outflow. So hopefully this year, things would, reverse a bit. Not greedy, assuming 10-20% of this outflow, right, come back to Malaysia. You're talking about maybe 5 to 6 billion. So we should see a decent performance for the index.
What will drive this reversal of
good question actually. First and foremost, ringgit strengthening, the ringgit strength. This would also act as another avenue for foreign funds, to make money. I think so far the performance of ringgit has been very decent, and going forward with what we are expecting from the US, I think the ringgit should break the 4 ringgit level, and hopefully retest the 380. That has been the goalpost for many.
Stopping you there for a minute. When do you think that will happen?
Wow, let me see first. Calculate. No, sometime this year,
Okay, first, second quarter.
I think by the first half of this year.
Okay.
Hopefully, because I see the first half of this year, things will still be a bit rosy with bells on, But after which, hopefully, things can sustain. If not, then we may see a bit of a volatility in the second half.
Okay.
You know, okay. So let's talk about first half first. First half better. So you know, I think party may still continue in Hong Kong, China. I think you know after which funds would possibly cascade down to the this region. You know, I mean this region still offer solid valuation. You know, I think fundamentals okay. Apart from politics, I mean here okay. You talk about like Thailand, Philippines. This is a bit questionable. So hopefully, you know, Malaysia would be on top of this investment list for this foreign funds lah. So we are really quite confident, you know, of the performance for the KLCI moving forward. In fact, I think our latest target has been revised up to 1810 for this year. You know.
All right, okay. Can I just stay on the ringgit for a second?
Okay.
All right, so it's easy to point to a softer US dollar for the rise of England, for the ringgit, but if you look at the performance last year, was the star performer, the best performing currency in Asia. So what exactly that made the currency perform better than many of its peers?
Yeah, before we say that, you know, ringgit has been a star performer last year, ringgit has been a dog for so many years. You know, I think our ringgit
about time, right?
Yeah, about time. So I mean, I was also very perplexed why, you know, ringgit was so weak when it went to 480 at one point. You know, there's no reason. I mean, everything is doing well, but just that the so-called speculators they love to play with the ringgit. You know, I think via all this what they call it, non depositive variable, something like that, you know, that actually dictate the rate of the ringgit then, you know, when confidence was at a low level. You know, they can do that now because everybody is looking good at Malaysia at the moment, you know, with fantastic FDIs and, you know, the confidence, you know, you see all these positive narratives on Malaysia at the moment. All right, so definitely, and going forward with, we expect lower interest rate environment. That should also benefit the ringgit versus the greenback.
Okay.
That's why we, you know, 380 would be the target.
Okay. That was once unthinkable in the past 10 years, but we are looking at that becoming very much a possibility in the near future. Okay, can I just maybe go into Bursa Malaysia for a bit, just look at sectoral, right? If you look at the outperformance last year, mainly in consumer-related areas, if you some of the big names, you know, 99 Speedmart, FNN, of course, some of the IPO standouts, Oriental Copy, right? So I'm just thinking that it seems like defensive positioning seems to show up very clearly sectoral level. Or do you see that continuing this year? You know, what do you think investors will be responding to in terms of Bursa Malaysia?
I think interest may still stick to all these consumer staples, you know.
So, I mean, because safe space, or do you see that because more earnings visibility compared to
more
other?
earnings visibility, but the valuation is not that decent any longer. You know, I think they are trading at a rather relatively high valuation. But you ask me, you know, which sectors, you know, one should look at the moment. I think it's still the banks. You know, that's where, you know, most of the foreign fund managers would look at first when they come in, because these are the most liquid sectors. After which they may look at other big sectors like the telcos, you know, and one of the dark horses would be the plantation sector.
Why?
You know, the plantation. I mean, at the moment, you know, there's a lack of. There's no excitement at the moment. You know, I think if you look at the CPO has been hitting around the 4,100 ringgit per ton level. You know, there's no excitement. But having said that, right, I mean, most of the planters with those efficient ones, right, they are making money at this level. You know, so they are expected to churn out decent earnings growth for this year. So that could be one of the dark horses
Okay.
for the planters.
All right.
You know.
Going back to banking and telco, these are sectors which valuations are still quite on the higher end.
Yeah, but these are the most liquid sectors, you know, and the foreign funds, they are willing to pay a premium for this, you know. Liquidity equals premium, you know. I mean, that's a reason why sometimes we see, you know, how come this company is so dirt cheap and but there's no liquidity. You enter to the stock, right, you may be stuck, you know, and there's no way out. But banks and telcos, they offer such, you know, leeway.
Okay.
You know, especially those within the maybe top 10, top 15 within the FPM KLCI.
So blue chips will continue to drive
Definitely.
the
I think
growth.
this will take the lead for the moment. You know, I would love to see there'll be more funds coming in, drive the FPM KLCI higher, liquidity, after which confidence,
will trickle down to the smaller.
yeah, to get down to the smaller and mid cap. That's how the early 90s bull run started.
Okay.
I was there, I saw it. But I'm not saying that, you know, this such bull run will occur again, but at least it will make things more exciting, you know.
Now, speaking of excitement, 2025 was quite exciting for capital raising. 60 IPOs,
Right.
Bursa Malaysia
Yes.
last year. It was a record highest in 2
Yes.
decades. However, most investors who got in are likely sitting below their listing price. Nearly 2/3 are trading lower.
Yes.
What is that saying about Malaysia's capital markets?
Maybe it's a bit saturated, I would say. Because 2024, I mean, it has been good for all the IPOs, you know, all the listings. 2025 has been a pretty mixed bag. And then they're saying that, you know, the 2026 we'll be seeing maybe another 50, 60s IPOs again. Good, you know, but for me, I say that not too good. Why? Because like for us, we are seeing a lot of retailers, right? They are getting all their money from the secondary market to the IPOs. That's why the secondary market for small and mid cap, right, is drying up. The liquidity is drying up. That's why there's pretty zero action there, no action, you know. So hopefully, you know, this IPO would maintain, you know, and not try to dry up suck up the liquidity from the secondary market, you know. But we have seen that, I think, over the last 2 years. That's why the secondary market has been in the doldrums for.
What do you think needs to be done to reverse that situation?
So
that the attention and the funds are not just predominantly concentrated with the blue chips.
Again, this is like, you know, catch-22 thing. And I think if sentiment within the secondary market for the small and mid-cap space are doing well, you know, I mean, I said, forget about the IPO lah. Let's invest in the secondary market. But so happened that the last 2 years, right, I mean, the secondary market has been pretty quiet. You know, I think those with investments there probably said, okay, now maybe, you know, try IPOs.
Does it speak to the quality of the companies, investor behavior, or is just the valuations, or maybe just attractive? It's more attractive out there.
I think it's more like behavior. You know, I think if you talk about valuation, it's very decent. Malaysia's valuation is very decent. In fact, despite, you know, the recent increase in the FPM KLCI, we are still trading below our historical average. So you talk about valuation, we are nowhere near those on Wall Street. You know, Wall Street now, like Nasdaq, Dow Jones, they are trading almost double their historical average. You know, so it's all due to, I think, behavior, confidence. You know, but I think Wall Street, you can take it with a pinch of salt sometimes.
Why do you say that? Let's get into that. Why do you say that?
I mean, it's all due to liquidity. You know, all the money they've printed over the past few years. You know, at the height of the QE, they've printed about 9 trillion USD. You know, then they have this quantitative tightening, maybe suck up about 2 or 3 trillion. You know, there's still a lot of trillions within the financial market. You know, but this story won't last long,
Okay.
you know, because, you know, US is losing its dominance in the financial system.
Okay, all right.
And also with Trump's erratic behavior, the trust in US denominated assets is sliding down.
Okay, this is getting interesting. So I want to get to the US markets because besides liquidity, what we saw last year, maybe the past few years, is that the market story was dominated by AI, technology, and we saw valuations hit record high, a bit of pullback, but still at very expensive valuations, right? So as we move further into 2026, is that narrative still running? Are people still, do you see that rally to continue?
Okay, first and foremost, I don't understand the rally. AI, yeah, the tech, yeah. You talk about data centers, all those tech innovation, yes. But if the rally depends on what the companies project to invest over the in the future, right? Say like 10 or 50 billion USD. Where are they going to finance? How are they going to finance such huge investments, and are they actually making money out of it or not? That's my question. Because everybody is is jumping on this AI bandwagon investments. Because all these companies, US companies, right, or Americans, they are number one in managing expectations. Number one. I mean, we Asian, no fight. So that's why the Feds, the companies, when they come up with all these their future investments or something like that, right? It's all managing expectations. But also that all these traders, right? It's also very interesting that despite centered on this, like, they would rather focus on the positive first than the negative. Because don't forget, US is still facing with a huge national debt, 38.5 trillion at the moment, and nobody talk about it. Wall Street is not talking about it. Nobody talk about it. And Trump said, "Yeah, I'm going to increase my defense budget to 1.5 trillion." How are they going to finance it? This is very interesting.
Okay. And I also think if you look at last year, a lot of companies benefited, or the economy benefited from a lot of front-loading activity, and propped up, of course, by lower interest rates. What's going to happen in 2026? Well, interest rates are expected to keep steady or even lower, seeing how Trump is pushing hard on the Federal Reserve. But what about the domestic economy of the United States?
Okay. My take on why Trump is so hell-bent on forcing the Feds in lowering interest rates. Maybe he realized that his tariff policy is not working. He said, "Oh man, this tariff policy is actually driving prices up," which is actually true.
It's happening.
It's happening. That's why, by lowering interest rate, the impact is more widespread and more immediate. That's why he is really pushing for it. And then with low interest rate, right, at least the Americans, they can breathe a bit for a while before inflation, hits them on the face again on higher prices, because of the low interest rate. So US is really in the mega dilemma at the moment, And like I mentioned just now, national debt 38.5 trillion. How are they going to finance it? By issuing new bonds, right? If your new bonds are priced with a low yield, you think there are any takers? No way. Because looking at US now, right, is so uncharacteristic of, the past US. Now the new US is.
Okay, so just going back to what you said earlier, the trust is eroding among investors and even generally towards the American system. Definitely. Where are they turning their attention to then? Where are they looking at placing their money, if not the bonds, if not trusting the Federal Reserve, trusting, which is an all-time high.
Gold, commodities now, gold. They're talking about silver. That's why if what I expect, to come through a bit, Asian equities, So that's why I think 2026 could be the rise of Asia, maybe. Who knows? You know, because at the moment, like Hong Kong market, you know, they're trading at 12, 13 times PE, which is at par to their average. But if you track historically, right, they can even surpass the 20 times PE. Meaning to say, you know, Hong Kong, there's still some legs for it to climb higher in the Hang Seng Index.
So would you say that the anticipated weaker performance of the US will see funds moving more into EM and Asia? Definitely. Okay, all right.
Yeah.
So just staying on US a bit, so some argue that the impact of tariffs that you mentioned could be cushioned by Fed policy tools, interest rates, currency, supply chain shifts. But do you think that will help offset the blow, or are they just delaying the pain at this point?
I think yes and no. I think delay pain, yes. Okay. And also that, I think we see that Trump imposed a tariff, then he delayed tariff. You know, the actual impact has been like postponed and postponed, you know. And if you notice, surprisingly, tariffs on China is less,
Harsh.
exactly, harsh on China. Because China is holding the Trump card on Trump. Right, I mean, rare earth lah, you know, I think, you know, China is, I think, control almost the entire probably supply chain, you know, the global.
And we are seeing countries trying to cut reliance on rare earth, on all the critical minerals. If you see Europe is doing that, you see Japan is doing that,
Yes.
US is doing that.
Yes.
But is that going to be successful? Are there alternatives to China?
Talk is easy, but actually to do it right is very difficult. You know, why do you think China, you know, has been so persistent in doing all this rare earth thing? You know, despite the pollution and things like that, because they realize that, you know, no one can live without this rare earth. You know, at the time the West was, you know, they're all hyping up all the green thing, you know, environment. That's why all the dirty work is being done by us, you know. But now, you know, look at the situation, you know, has turned against them. You know, for them to, like, you know, restart, to dig, to process, it's not that easy. It will take that more than 10 years, you know.
Okay. But I just want to also talk about the China story, right? So China, you seem to be very positive about Asia, China, but it is facing weaker domestic demand and disinflation, right? So how much do you think of this, the control over supply chain, exports, how much do you think that could offset domestic pressures?
Okay, I think China, unlike US, they got money, lots of money, you know. I think from my last check, China has got the foreign reserves more than 3 trillion USD, you know. If they want to inject any easing policies, they can do it anytime. I think from their previous, I think the recent 15 5-year plan, 2026 to 2030, okay, I think China has, I mean, the Chinese government has already said that they are going to inject more funds into the financial market to ease the burden, to instill confidence, and also to improve the domestic consumption. You know, I think last year they have done already by cutting the RRR and also interest rate. This year, I think a lot of there are high expectations that they'll do the similar, cut RRR and reduce interest rate, you know, over the next couple of months.
Okay.
That's why, you know, a lot of interest in China at the moment. Hence, you know, the strengthening renminbi against the USD.
Okay. All right. Kenny, in a couple of minutes that we have left, as we head into, well, as we are well into 2026 now, first quarter, where do you think are the opportunities and where do you think are the maybe overlooked risks that you might keep an eye
equities?
on? For equities, yeah.
I think if you say that overlooked risk, right, domestically should be quite okay lah. I'm just worried of what will emanate from US, especially from Trump.
Our markets already have probably priced in the geopolitical risk because it seems like it is a new normal. The geopolitical risk uncertainty seems to have been a new normal for a while.
It is. Now, I think a lot of fund managers are saying that, you know, I think Trump's words maybe cannot be trusted, you know. I mean, he can say what he likes, you know. I mean, even the Supreme Court in the US are looking to fighting against him, you know. So I don't know how this fellow is going to get himself out from all this mess, you know. So, however, you know, Trump being Trump, right? I think anything that's it's very difficult to guess what his next move is. You know, that's the problem. You know, that would be the outstanding risk. I think as for the opportunities, again, you talk about the equities market. I would look for the laggards, you know. Yeah.
The plantations, like you mentioned.
Plantation sector, you know, the laggards.
So that's for domestic. What about outside global markets?
Outside, definitely the Hong Kong market. You know, that's where the party is happening now. Definitely.
Okay, so they are back in business now.
Oh, definitely. I think they have again reclaimed their number one spot in Asia as the hottest stock market in Asia. Yeah.
Okay. Yeah. All right. Okay. Well, thank you so much, Kenny, for that insight. And sounds like we've got off to a very exciting start of 2026, and seems like it's more to come with Trump in the picture still for probably a foreseeable future. Yeah. All right. Thank you so much, Kenny. Hope to see you again.
Likewise.
Thank you.
Okay. Thank you.